Today we are talking about whether or not the crash is likely over from these tariffs or whether or not we have a lot further to go because this is probably going to be one of those crashes where unless there is a ton of actual economic impact, which is still to be determined, things could pop back up just as fast as they fell, and we could be up 10% on the S&P 500 in a single week or in just a couple days if there's a couple of deals announced or something like that and the freak out ends. People realize there's not going to be as much economic impact as feared, but we have a lot to talk about in this video. I have so many things that I want to go over with you guys, but just to start here, you can see that year to date, my portfolio is down 37.77%. And that might freak some of you out. It doesn't freak me out at all. In fact, this is the lowest that my portfolio has been in a decent amount of time. It feels like, 2 months ago we were up 124% on the year. So moving from that to down, 37%, it can hurt the psychology. But the thing is, when I look at all of the companies that I own, I'm just like even more attracted to them now that they're cheaper. Their PEs are lower. That you can buy them at better prices, and for most of them, their actual impact, the actual impact on them is not very large at all. So let me guys show you on the 1 year. We're still up 74.12%. So over the last 12 months. You can see compared to the NASDAQ is actually now only up 0.27%. So 74%, it's actually funny. I know this looks like a crazy roller coaster, yet somehow I have been very consistent. And since I started investing a little over 5 years ago with $20,000 that I had saved from one of my early YouTube channels, I've actually averaged around 70% annualized gains. And now we're sitting here at 300,000. I think my performance it might actually be a little bit higher than that because I have taken a decent amount out. I know you're supposed to continue dollar cost averaging in. That's what I teach here. But the reality of the situation is that I did things that are arguably smart or not smart, like buying a house, which required a down payment, doing something like buying a Tesla, which is probably on the less smart side unless the autonomous taxi network launches and I can let it go out there and actually earn its own keep. That is the world that I'm excited about, but to be decided on when that future actually comes about. So, okay, enough on my own performance. Let's get into all the things that I want to talk about. But yeah, things are going well. I'm really excited about what I own, and I think that there's going to be a ton of upside. I think this is actually going to be a pretty great year. It really depends on how much lower we drop in the short term. So let's talk about that. But I think that probably from here, we're up on the year, even if we're not up overall on the year, if that makes sense. So this was this morning. So if you guys don't know what happened, Unusual Whales, that's just a little news account on X. They tweeted things were very red. You can see NVIDIA, down 7.21%. Amazon just crashing, like everything down. And then there was a fake article dropped, or fake news release, that the tariffs were going to get paused for 90 days to give time for more discussions, and the market shot up. The S&P 500 shot up about 8% in like 10 minutes, 20 minutes max. It was quite wild, that move. And then we found out the story was fake, but the market actually didn't get anywhere near to how scared it was in the morning. I think people were kind of just shocked into this realization, like, wait, there's some like upside risk here. Like if a big deal gets announced or something like that, the market just wants to fly higher. I mean, the flip on some of these is just absolutely crazy, right? Like the Amazon down 5% to up 2. And this isn't even like the max down to the max ups, right? It's not even that, like, it doesn't even represent how big the moves really were from the bottom to the top. So I just thought that was really interesting. But yeah, the news media is freaking out. So like, this is just YouTube here. You can see CBS, which, yes, if you want BS, economists say life will never be the same after Trump tariffs. It's just a ton of fear mongering is going on. The White House has actually been saying stuff like it's irresponsible, some of the stuff that's being said. And yeah, acting like it's the end of the world is pretty crazy because I did a little bit of research. So I found out, okay, so the average tariff that Trump has imposed just across all countries, I think it's like 12.5% or something like that. And that's the peak, right? So the news we're going to be getting going forward is going to be likely about how there's deals made, how tariffs are coming down on both sides. So future news is likely going to be positive. But I was like, okay, it's a 12% tariff. So if we had a new 12% sales tax imported or imposed in the US, like that would be a very large tax. But then I looked and saw that like imports are only 16% of America's GDP. So a 12% tariff is pretty large as an average. I know on China and stuff, it's a lot higher, and that's what people are very freaked out about. But 12% tariff added to 16% of GDP, which is, you can think of it like the total economy, total gross domestic production or product. That is affecting, first of all, a very small percentage of the economy. And it's based not off of the price that you're paying as the consumer. It's 12% of like the bulk price that the company is buying it at. So it's much nearer to cost of goods. It's not the actual sale price. So it's a 12% increase that isn't a real 12% increase on the price that you're paying for it, if that makes sense. So I think the fear is overblown for sure. Plus, I was listening, I think there was actually a report on it here. Trump's top economic advisor, I listened to the interview, says that there's already over 50 countries. He said over 50 countries that have reached out to negotiate tariffs. So there's already 50 countries that are negotiating with Trump. There are going to be deals. So future trade news is going to tend towards the upside. And the market is underestimating the upside swing on just one or two new trade deals. I really, really believe that's the case. So yeah, ahead, what's the administration going to be focused on? Tax cuts, trade deals, Fed interest rate cuts. I mean, the Trump administration can't focus on that, but the Fed likely is going to be cutting rates this year. And then we have to remember, take a step back here, remember what market we're in. We still have the continuation of a generational, potentially like once in a lifetime, like change in productivity because of the AI revolution and the productivity increase. It's just going to be absolutely insane. So we already saw like Europe offered zero for zero tariffs with the US. This is just one of those deals that's been offered. And Trump's advisor was actually talking about the fact that he's like Hassett has seen some of these deals. He's like, they're really good. Obviously, it's up to Trump if he wants to accept them. So like for this EU one, Trump's going to want not only zero tariffs, but he's also going to want Europe to take the VAT tax off, which is a 20% value added tax, which Trump says is the same as a tariff. And I would tend to agree with him if U.S. companies have to pay it. So this is all very interesting, and I just think that the news is going to tend towards the positive going forward. I just want to put this into perspective. I was just listening to Milton Friedman debate a protectionist talking about tariffs, like trying to figure out, like, is this actually a good thing? But this is from years and years, decades ago, right? They've been talking about this, and there's been debate about this, whether or not tariffs are good for the economy or bad for the economy. So it's not even like a sure thing that tariffs are an overall negative thing. And I think that personally, I'm not a big fan of taxes. I think the less taxes, the better. But if you're going to tax something, it makes sense that like you tax things that you want less of, because you are going to get less of whatever you tax. Now, if it's something that's important, obviously people are still going to need it. Like if we tax gas, they need gas to get around, but people will drive less if gas is more expensive. So taxing imports, if you have to have some sort of tax, if you need a tax at all, then taxing imports seems like something that would make sense to tax, since there are potential upsides to it as well, like helping out your local economy, helping ensure that there's more jobs in the US. And I feel like something like a 10% flat tariff on imports is fine. And it's like, and if you can still outcompete a US company while not only shipping your good here, if it's a physical good, so you're paying extra costs because of that, but then you can also overcome the 10% tariff, then it's like, obviously you should be able to succeed in the US. Like you're making some incredible products if the consumer is still going to choose you when you have those tailwinds against you. So the consumer can still choose something if they prefer that. But it does give a lot more opportunity for people to localize production, either with robotics or however America is a creative country, however Americans want to produce whatever the said good is. Having that opportunity to bring that production into the US, I think is good on a national security basis. And it is going to generate revenue for the government, obviously, which the government does need revenue. I mean, really, it needs to cut spending, but they're doing that as well, right? But it needs to get rid of its deficit so that we can actually deal with this debt, which is long-term very good for the market if the government isn't on the risk of bankruptcy or something like that. So I think that if the Trump administration actually goes after and convinces Congress to do some big tax cuts next, then I think it's a really worthwhile experiment to try tariffs for your revenue generation, and cut tax on people making less than $180,000 a year or something like that. I think that those are totally going to offset each other. In fact, the tax cut could be more stimulative than the tariff is a headwind. And I actually think that, yeah, like overall, I'm feeling very positive, which is so interesting because let's look at the VIX here. So you can see that the VIX, which this is a volatility index here. People look at it as like a fear index. It's not quite a fear index, but it's talking about volatility. The VIX is over 45. It's at 46 here. It topped out, I think, even higher than this, but this is the 1 year. And what's crazy is the last time the VIX was this high was COVID, and the VIX doesn't get this high that often. It's actually quite rare. And you guys might have seen this chart somewhere else. But this is the average return after the VIX reaches 45 for the first time in a month. So we just did this. And if you look at the average return after the VIX hits 45, it's like so good. So the average 1 day later is 2.5%. 2 days later, I wish we were looking a little bit longer term. I'm more of a long-term investor. I don't really care that much about this short of time. But if you are short-term trading, it's like, okay, 83% chance higher, 3 days later, 83% chance higher a week later. Your average return is 4.2%. So over 1 week, like that's pretty good. So it's just generally saying, like, at this moment of extreme fear that we seem to be in, because the US is putting tariffs, which we haven't really used much, onto the global economy as a factor people have to think about. And that's creating a lot of fear. The market, like, normally holds up pretty well after you reach this point of fear. You can get higher volatility, but it's really, really hard to maintain even this level of volatility in a market. And normally as volatility goes down, as stuff starts to calm down, people start to get more level-headed, and then they look at valuations, and then you realize, wait, we've been selling off companies that are like literally sell things that aren't even being tariffed or aren't impacted by this at all, for this reason or that reason. So I just wanted to end this quick video on my thoughts, sharing my thoughts, zooming out and taking this long-term perspective that I think is very, very important and valuable. So this is if you invested $1 in the stock market in 1870. So you can see you get the first 10x in 1890, maybe 1895. You get the second 10x, so you get your 100x in like 1930. So, that's a long time. That's 50 years, but you get a 100x in the stock market just owning, the overall stock market, which is, quite insane because then you can do even much better than those returns by being a long-term investor and actually investing smart in companies with a lot of long-term growth ahead. So like, yeah, you have these incredible drawdowns like the Great Depression. Honestly, you had a terrible period here where you have a Great Depression, and World War II back to back. And yet still, over this 20-year period where like the worst stuff in the world happens, the market is resilient and you come out of it at the same spot. And then you go higher. And yes, this is looking at probably more than an entire lifetime, but you're literally getting a 10,000x here just betting on the economy. And over the long term, just like owning the stuff and not getting freaked out is really, really important. And I think that sort of mindset, not letting yourself get scared out of stuff in these moments of fear, because you have to remember, when is the fear the greatest on these charts? When do you think the VIX is spiking, is the highest on these charts? It's right down here. It's right in these peaks. That's when the VIX is the highest. That's when people least want to own assets. And you have to be the contrarian and come in and say, oh, wow, the market just crashed 12% in 4 trading days. I think I'm going to come in and buy here. And it's like, yeah, maybe you're buying here. Maybe you're buying here. Maybe you're buying here. Like, likely you're probably not timing the perfect bottom, but doesn't matter when you think out another 30 years and the entire market has 100x'd or 10x'd. No, like it really, really doesn't. And these are times when the VIX is the highest, that you can probably actually have the highest conviction that your investment is likely to be up within at least a couple of years. Because these are times when, people's investments are up within a couple of years. When you're buying when the VIX is high, when people are the most afraid, like on Black Monday, which this week, Black Monday was brought up a couple times. It's like, oh, what happened when you bought on those crazy days of fear, on this tiny little short sell-off? Yes, it's still a couple years, but it's like you got incredible deals to own amazing companies that are going to continue innovating, that are going to continue creating better products. And what happens when they create better products? It means that they are going to become more valuable because the consumer is going to give them more money. So owning these innovative companies, it's going to be worthwhile long term when you zoom out. So my whole takeaway from this is, I think right now, people are underestimating the upside risk. People really are underestimating the upside risk. I cannot believe how many people are selling out of this market during the AI revolution. Like the fact that you can buy AMD. The fact that you can buy AMD right now at a forward PE of under like 18 or something like that is just absolutely crazy. I don't actually use MarketWatch that much, so I'm not sure where it shows you what I'm looking for here. Wow, the fact that MarketWatch doesn't even show you, oh, here we go, PE ratio. Okay, so it doesn't show you the forward PE ratio. PE ratio is 83. That is not an accurate reflection of AMD's actual cash flow ability. So let's look at their forward PE real quick. I wasn't going to talk about AMD in this video. That's why I didn't pre-prepare it. But hey, a little bonus for you guys. Because we're literally in the AI revolution. AMD is going to be a big factor. ADM. Nice job. AMD is going to be a big factor in both inference, which is AI thinking. But then I also think they'll come back in the training side. People like actual gamers and stuff a ton of them are going to be using AMD. Their new chip that just came out is like highly competitive. And according to Yahoo Finance, an 18.45 forward PE on a company it's probably going to grow faster than 30% next year. That might have a couple of years of 40% growth ahead, and it's trading at an 18 forward PE. Like that's an absolute gift. Nvidia is even trading at under a 20 forward PE, I think. Now Nvidia's price to sales is more like 20. It just has higher profit margins. But Yeah, I think this is just a nice gift during the middle of the AI revolution. So if you guys enjoyed this video, this is the first kind of video I'm doing in this style. So they'll obviously get better, but I would appreciate any feedback. I would also appreciate you drop a thumbs up if you enjoyed at least some of my takes on what's going on in the market. And then subscribe if you want to see more videos like this one. And yeah, welcome to How to Invest, and I'll see you in the next one.